So let's just quickly discuss 20-4 class. So I would want to believe that as you answered the problem class, you could tell yourselves that you could have answered this without any external assistance, especially that this should not be the first time that you've encountered transactions. This is not the first time you're tasked to journalize transactions involving a corporation. You are not allowed to claim that you have no idea how to journalize these transactions, class. At the very least, they should have been covered in your partnership and corporation, and these could also have been covered in some of your accounting classes in senior high school. You should not you're not allowed to say that you have no idea how to journalize these transactions. And mastering the journal entries class for transactions involving your shareholders' equity is very important because it's the surefire way of answering problems for shareholders' equity. I hope you realize that for problem 20-4 alone, you could be asked 5 to 7 questions already in a problem setup. The same for problem 20-5. You could be asked for the balance for your ordinary share capital, preference share capital, share premium ordinary shares, share premium preference shares, subscriptions receivable, your retained earnings, and your total shareholders' equity. So you can also expect during the exam that you may be given a long problem, and all that is asked from you would be to journalize the transactions, and you will be asked from these transactions how much would be the balances of these accounts, how much would be the balances of your shareholders' equity accounts that will be reported in your statement of financial position. And again, the best way to correctly answer those kind of problems would be to simply prepare the journal entries. Okay, and this should not be the first time you're encountering these accounts, these transactions. Okay, so let's go with number one. The entity was authorized to issue the following share capital, preference share capital, and ordinary share capital. For number one class, technically there will be no journal entry since we are using the memorandum method. Okay, what will be done is a memorandum entry in your books indicating or stating that the entity is authorized to issue preference shares and ordinary shares. You will indicate there the par value of your ordinary and preference shares. You will indicate the number of shares that you are authorized to issue. Technically, this is not a journal entry but merely a statement or a memorandum entry. Okay, so no journal entry for number one. Let's proceed to number two. Okay, for number two, the transaction states 40,000 ordinary shares were issued for cash at 60 pesos per share. Okay, what does this tell us? That these shares were already paid in full, class. And how are we able to arrive at that conclusion? Why can we say that these 40,000 shares were already paid in full? Because the rule is shares should only be issued if they are fully paid. Okay, you cannot issue shares before they are fully paid. Shares should only be issued once they are fully paid. And why are we able to arrive at the conclusion that these shares are already fully paid? The transaction tells us that these are already issued. Okay. Now, for me, the easiest transactions to journalize class would be those that involve cash because it's very easy for us to know whether cash is involved, and it would be very easy for us to know whether cash should be debited or credited. Okay, so if we receive cash, then definitely we will be debiting cash. If we are the one letting go of cash, if we are the one paying cash, then we know that our entry would involve a credit to cash. And in this transaction, who are we in this transaction? Are we the payer or the payee? Are we the recipient of the cash or are we the one making the payment? We are the recipient because we are essentially exchanging our shares. We are essentially selling a stake or interest in the corporation in exchange for cash. We are making other people part owners of the company by letting them invest cash, by allowing them to give their cash to the entity. So in this transaction, obviously, the entity receives cash. So no doubt that our entry will involve or include a debit to cash. And in most instances, the amount of cash that is involved, class, is very easy to determine. Unlike in other journal entries, it's difficult to compute for interest expense, for the amortization. But if we're talking about cash, class, it's very easy for us to know how much cash is involved. Okay, here we are exchanging our 40,000 ordinary shares at a price of 60 per share. So all you have got to do is to multiply 60 pesos per share by the number of shares that are being issued. So 40,000 times 60 pesos per share will give you a total of 2.4 million. So we know that our debit will that we will have a debit to cash in the amount of 2.4 million. And if the transaction involves issuance of shares, class, okay, we know that it will result in a credit to share capital. Okay, whether it's ordinary share capital or preference share capital, as long as the transaction involves issuance of shares, we know that it will involve a credit to share capital. When will it be a credit to ordinary share capital? Very obvious, if the shares that are being issued are ordinary shares. When will the credit be preference share capital? If the shares that are being issued are your preference shares. And what shares are being issued in number two, class? Ordinary shares. And we know then that the credit would be to our ordinary share capital. Okay. But one thing you will have to take note of, class, is that it's possible that you will have one or two or more credit, class. And it depends on the issue price. It depends on the price for which the shares are being issued. Because the rule is, and this is very important, many students would forget this one. And the moment you forget this, then definitely your entry would already be wrong. Your total shareholders' equity might be right, but your ordinary share capital will be wrong. Okay? One of the most important things to remember for journal entries for your shareholders' equity transactions, class, is that the amount that will enter your share capital account should only be the par value of the shares that are involved. It does not matter how much was the issue price. The amount that will enter your share capital account should only be the par value of the shares that are involved. Here we are issuing shares. And what does that mean? The amount that will enter our ordinary share capital should only be the par value of the ordinary shares that are being issued. What happens if the shares are issued in excess of the par value? What amount will enter your share capital? Again, still the par value. But what do we do with the excess? It will be credited to your share premium. The amount that will go to your share capital should only be the par value. Anything in excess should be credited to your share premium. There is no limit as to how much can enter your share premium, class. But the amount that can enter the share capital account, whether ordinary or preference, should be limited to the par value of the share. That's very important, class. Okay? What do students normally do, man? What mistake do they normally commit? They will just lump everything to your share capital. While that may lead to the same total shareholders equity, class, but if you are asked for individual account balances, if you are asked how much is your ordinary or preference share capital, then definitely your answer would be wrong. If you'll be asked how much is your share premium, then definitely your answer would also be wrong. Why is it important to segregate at the very first instance? Why is it very important to segregate the amount pertaining to share capital and the amount pertaining to share premium? Because later on, class, when you retire the shares, when you have treasury shares involved, there is a hierarchy as to which of these accounts should be charged first. Okay, so it's important for you to segregate the amount that goes into share capital and the amount that goes to your share premium. Okay. Now, to complete our entry, knowing that the amount that will enter your share capital is only the par value, what should you do to determine the amount of credit to share capital? Get the par value associated to these 40,000 shares. How much is the par value of our ordinary shares? 50. And how many ordinary shares are being issued? 40,000. So 40,000 times 50 par value per share will give you a total of 2 million. And that will be the amount of credit to your uh, ordinary share capital. If the issue price was at 50, class, then our entry would have ended there. Debit, cash, and credit, ordinary share capital. But we will have a second credit because the shares were issued in excess of the par value or above the par value. What will happen to the extra class? It will go to the share premium. How much cash was received for the issuance of the shares? 2.4 million. How much is the par value of these shares? 2 million. How much is the extra? 400,000. And these 400,000 will go to your share premium. Okay. Alternative way of arriving at 400,000. Just compute the extra, just get the extra per share. How much was the issue price? 60. How much is the par value? 50. So for each share, there is an extra 10 pesos. 10 pesos times 40,000 shares, you will also get 400,000. Now, another important theory class, you cannot issue shares below their par value. You cannot sell you cannot issue the shares initially below the par value. Okay, it's either at par value or more. If it's at par value, everything goes to share capital. If it's above, if it's above par value goes to share capital, excess goes to share premium. Okay, that's the second important thing to remember. You cannot initially issue shares below the par value. Then why do I qualify it with the word initially class? Because subsequent sales, subsequent transfers for the shares class may be done at a price lesser than the par value. What do I mean? The entity initially issued its shares to its first shareholders. The first shareholders sell it to some third person. Can the selling price to the third person be lesser than the par value? Yes, because we do not care as to their transaction. Okay, for initial issuance of shares, it should not go below the par value. Subsequent transfers for the shares, they may be below the par value. Especially if the entity is not performing well, you can expect that the fair value or the market price to be lower than its par value. Okay. Now, another scenario. The entity issued its shares for the first time to its shareholders, but later on, the entity decided to buy back those shares. Okay, is that possible? The answer is yes. Okay, what do we call those shares that were reacquired by the issuing entity? They are referred to as your treasury shares. Can these treasury shares be subsequently issued to outside parties? The answer is yes. Now, can the issuance of these treasury shares, can your treasury shares be reissued at a price below the par value? The answer is yes. Because again, our rule for issuing shares below, sorry, our rule prohibiting the issuance of shares below par value applies only to their initial issuance. For reissuance or for subsequent transfers, they may be resold or reissued at a price lesser than the par value. Okay. So for treasury shares, they may be reissued at a price lesser than the acquisition price, lesser than the par value. Okay. But our concern here is simply the entry. What's the complete entry for number 2? Debit, cash 2.4 million, credit, ordinary share capital 2 million, and credit share premium for 400,000. Okay. Number 3, 10,000 preference shares were issued at 120,000 for cash. Again, do we know that these were fully paid? Yes, because it states that they were already issued. Shares can only be issued once they are fully paid. Delinquent shares is a different story. Okay, do not think of delinquent shares yet. But again, our rule is shares can only be issued once they are fully paid, and they should only be issued at a price not lesser than the par value. Okay, so the same entry class, we will have a debit to cash. The question now is for how much were the shares sold or issued? It states here that the selling price was 120 and the number of shares issued were 10,000. So all you have to do is to multiply 10,000 with 120 and that will give you 1.2 million. Moving on to the credit, we ask the question, how many credits will there be? 1 or 2? It depends on whether the issue price exceeds the par value or not. How much is the par value of the preference shares? It's 100. So were the shares issued at par value, above par value? Yes. But what's the rule? What amount will go to our first credit? By the way, what would be the account that will first be credited? It would be your share capital, particularly preference share capital. What's the rule? What is the amount that will enter this account? It should only be the par value of these shares. And again, how much is the par value per share? 100. How many shares are we dealing with here? 10,000. So 10,000 times 100 will give you 1 million. Okay, so we will have a credit to preference share capital in the amount of 1 million. And how much is the excess? Cash received is 1,200,000. Par value is 1 million. So there is an excess of 200,000, and that will go to your share premium. But you will have to specify, because this is now a share premium uh, pertaining to your preference shares. So share premium preference shares in the amount of 200,000. Alternative way of getting the 200,000 class, get the excess per share. Okay, how much is the issue price? 120. How much is the par value? 100. So excess per share is 20. Multiplied by 10,000, you would also get 200,000. Moving on to number 4, 10,000 preference shares were subscribed at par value. Okay, so here, there's even no mention of payment class. What is being mentioned here is only of subscriptions. Okay, so this will result in subscriptions receivable and subscribe share capital class. Okay, subscribe preference shares. Okay, uh, how much are we expecting to receive for these shares since they are subscribed at par value? So this would simply be 10,000 times 100,000. Uh, 10,000 times 100, you would get 1 million. So we will have a debit to subscriptions receivable in the amount of 1 million. And this is now what I was talking about before when we talk about receivables class. Uh, there were problems wherein we have subscriptions receivable. We said that if subscriptions receivable are expected to be collected within 12 months, then they will form part of our current assets. I hope you can still remember that one. Subscriptions receivable that are expected to be collected, that are collectible within 12 months, will be part of your current assets. What will happen if they are not collectible within 12 months? Will they be part of your non-current assets? No. And that's one of the common mistakes. Students would think that subscriptions receivable will either be current asset or non-current asset. Okay, that's wrong. If within 12 months, current assets. If beyond 12 months class, a deduction to your total shareholders' equity. If your subscriptions receivable is collectible beyond 12 months, then it would be a negative amount in your shareholders' equity section class. It would be a deduction to your total shareholders' equity. This is what I was trying to warn you before when we were discussing receivables. Common mistake is to think that when subscriptions receivable are collectible beyond 12 months, that it will just be non-current asset. That's wrong. It will appear in your shareholders equity section class as a contra equity account. It will be a negative amount. It will be a deduction to your total shareholders equity. Okay. Now, another important rule class which many students tend to forget. The account title subscribe share capital or your subscribe preference shares or subscribe ordinary shares. The rule is the same for your share capital accounts. And what was the rule for share capital accounts? The amount that will enter them will only be the par value. The same applies to your subscribe share capital class. Okay, so the amount that will enter your subscriptions as your subscribe share capital should only be the par value. But it is not highlighted in this problem because the subscription price was only at par value. Okay, but again, the same rule class. Ordinary share capital, subscribe share capital, ordinary share capital, preference share capital, and subscribe share capital class should be the same. The amount that will enter them should only be the par value. Again, that's a very important rule class. Many students would tend to forget that one. So our entry here, since the issuance is only at par value, would simply be debit, subscriptions receivable, and credit. Subscribe preference shares or subscribe share capital dash preference shares in the amount of 1 million. Okay. Now, the reason class why you are expected not to have difficulty with this one class, because the normal behavior for share capital class and for even share premium is they are always going to be credited. It's very rare for these accounts to be debited class. When can you find them being debited? Number one, if your entry is wrong. Number 2, if you're possibly preparing correcting entries. Number 3, if we are now retiring these shares. But when does retirement of shares happen? Very rare and towards the end, so far down the road already. A normal transaction for share capital, share premium would just be issue, additional. So always credit. Anytime you will find yourself debiting these accounts, class, then that should be a signal on your part that you are doing something wrong. Okay. Number 5, 400,000 was received on the above subscriptions of preference shares. So the entry here would be simply, will there be debit to cash here? Yes, because we are receiving payment. So debit cash, 400,000, and credit subscriptions receivable in the amount of 400,000. Nothing tricky here, nothing unique to shareholders' equity. Any form of payment, that would be the entry class, debit to cash and credit to the receivable. Do you have class after this one? Let's just go beyond a little class. So that's it. But question, are we going to be issuing the shares as of number 5? The answer is no, because was there full payment on number 5? No. Shares will only be issued once full payment is achieved. Was there full payment in number 5? The answer is no. Number 6, 1,000 preference shares were issued in payment of legal fees of 100,000 in connection with organizing the corporation. Now, you will have to take note of the rules, class, whenever shares are issued in exchange for a non-cash asset or consideration class. Okay. First, the rule is the shares are to be measured the fair value of the benefit received. Second, fair value of the shares issued. Third, par value of the shares issued. Here we know, we are told as to the value of what we are paying for. Okay, I hope you understand the transaction. We need to pay for legal services class in the amount of 100,000. And how did we pay for this? By issuing shares. So the value then of what we are paying for is the 100,000. And that would be the value that will be assigned, that will be considered as the issue price of these 1,000 shares. Okay, so you will be debiting legal expenses or some other expense account class in the amount of 100,000. The question now is, what amount will be credited to preference share capital? Will we be crediting preference share capital here? Yes, because preference shares were issued. And this is now where students will get it wrong. Okay, if they will forget our rule that only par value will enter your preference share capital, what will their common mistake, what will their wrong entry be, class? Debit, legal expenses, and credit, preference share capital. But will it still turn out at 100,000, class? Okay, this is not a good problem to highlight my point. The 1,000 approximates the par value. If the price class was greater than the par value, then common mistake would have been to credit everything to the share capital. But here it so happens that the value of the services being paid for approximates the par value. So our entry here will simply be debit, legal expenses and credit, preference share capital in the amount of 100,000. Number 7, 20,000 ordinary shares were issued for property, plant, and equipment, which had a fair value of 1,300,000. Are you going to be debiting cash here? The answer is no, because you did not receive cash. What did you receive instead in exchange for your 20,000 shares? You receive a property, plant, and equipment, which is an asset account. So you debit property, plant, and equipment at what amount? The fair value of the asset or benefit received. What's the fair value of the asset received? 1,300,000. So debit property, plant, and equipment in the amount of 1,300,000. This would now be a good illustration of the point I was trying to make. What would be the common mistake here? Debit property, plant, and equipment 1,300,000, and credit share ordinary share capital in the amount of 1,300,000. Okay, students commonly usually commit that mistake, class, because there is no mention of an issue price. If there is a mention of issue price, it's very easy for the students to realize, oh, the issue price is different from the par value. But if you're given a lump sum value or amount, class, some students would simply charge everything to your share capital. But again, what's the rule? only the par value of the shares involved will go to your share capital account. How many shares were issued, class? 20,000. What's the total par value of these 20,000 shares? 1 million. So only the 1 million should go to your ordinary share capital. What will happen to the excess? Uh, it will be charged, or it will go to your share premium ordinary shares amounting to 300,000. Okay. Number 8, 15,000 ordinary shares were subscribed for at par. Again, this will result in subscriptions receivable for ordinary shares and credit to subscribe ordinary share or subscriptions or subscribe share capital ordinary shares amounting to, is it 750,000, class? 15,000 times 50, you will have 750,000. But again, don't forget, class, par value, only the par value will enter your subscribe capital account. Number 9, are there people waiting outside? Number 9, 40% of the ordinary share capital subscription was collected. To what transaction do you think this is pertaining to, class? Number 8, because this is the only transaction that that involves subscription of ordinary shares. How much is 40%? 40% is 300,000. So debit cash. I hope it makes sense to everyone. The debit to cash. Debit to cash, 300,000, and credit to subscriptions receivable ordinary shares in the subscribe capital ordinary shares in the amount of 400,000. Are we going to be issuing the shares as of transaction number 9? Not yet, because there is no full payment yet. Okay, number 10, the balance owing on the subscriptions described in number 4 and number 5 was collected, and the preference shares were issued. So we'll be preparing 2 entries here, class. First one, to record the collection. Second, to record the issuance of the preference shares. For number 10, you should compute first as to the balance. If you will not be able to get the balance, then definitely you will get the entry here wrong. The subscription, class, in number 4 was for 1 million. And how much was paid in number 5? 400,000. So the balance is 600,000. So how much cash then is received in number 10? 600,000. So there will be a debit to cash, 600,000, and credit to subscriptions receivable in the amount of 600,000. But what should you not forget? Do not forget to issue the shares. And because this is another common mistake for students. The transaction only mentions of full payment, class. They will record the collection by debiting cash and the subscriptions receivable. They will forget to journalize the entry for the issuance of the shares. Okay, as a matter of procedure, if the shares are fully paid, they should be issued. Now, what questions will students normally get wrong? How many shares were already issued? They would forget that the moment that there is already full payment of subscribed shares, they should already be issued, and that should form part of your issued shares. Okay, I hope you do not forget that for full payment of subscriptions, aside from recording the collection, you will also record the issuance of the shares. And what would be the entry here? Debit, subscribe share capital preference shares. You are simply transferring the subscribe share capital, class, to your preference share capital. Okay, it's like your subscribe share capital account is only a holdover account. Until it's fully paid, it will remain there. Once it's fully paid, the amount will be transferred to your share capital account. So again, the second entry here would be subscribe preference shares and credit preference share capital in the amount of 1 million. Okay, and this is another source of error on the part of the students. It should be the entirety already. How much was the subscribed share capital, class? 1 million. So the entirety would go to your share capital after full payment. Okay. So again, the 2 entries in number 10 would be debit cash and credit subscriptions receivable preference shares in the amount of 600,000. Second entry would be subscribe preference shares and preference share capital in the amount of 1 million. Very important kasi it's 1 million, not 600,000. 11 would be the net income for the current year was 2 million. Plus, if you have an income, what will it do to your retained earnings? Remember that net income will be close to retained earnings. What does income do to retained earnings? Will it increase or decrease retained earnings? Increase. Okay? So you will, and what is the normal balance for retained earnings? Debit or credit? Credit. So if you will recognize an income class, your entry should include a credit to retained earnings. And the other account will simply be your income summary. The income summary is where you summarize your income and expense accounts. So the debit here would be debit, income summary, and credit, retained earnings. What if it's a loss? What if it's a loss? What would be your entry? What will you do to your retained earnings if you have a loss? You will debit it because a loss decreases your retained earnings. Okay, so debit, if it's a loss, debit, retained earnings, and credit, income summary. You use income summary for whether it's a profit or loss class. Okay, your income summary is used to balance all your revenues and your expenses. And if you got all the entries wrong, class, the balances after these transactions should be preference shares would be 2,100,000. Ordinary shares would be 3,000,000. Subscriptions receivable 450,000. Uh, share premium 200,000 and 700,000 for ordinary shares and preference shares. Retained earnings would be 2 million for a total shareholders equity of 8,300,000. Plus, you would have gotten total shareholders equity wrong if you did not deduct the balance of your subscriptions receivable. If the problem is silent, subscriptions receivable is a deduction to your shareholders equity. If the problem states it is collectible within 12 months, not part of equity but reported as part of your current assets, current receivables. Okay. I'll give you a recording for the other parts class later on. Okay, that would be all for tonight. Thank you for staying. Thank you for coming. You may go.